We're here to make a brief analysis on XING. This is the chart since the IPO, and this is the medium term chart. You can see there was a nice bull run here from $5 to more than $20. I was fortunate to buy the stock, I believe it was here, and sold it at 1960 or something like that before this big gap down, and the stock has been bearish lately. The 50 days is now crossing below the 200 days moving average, you can see here, and the stock is down a bit today. This chart is not updated with today's session, but the trend is bearish now, and it's hard to understand because the PE multiple seems so low and revenues seem to be growing so much, and making mobile phones in China seems like a great business, and it's hard to understand why the stock goes down. But it goes down because of dilution, very heavy dilution in this company, and I've promised myself not to buy it until they file the proper SEC filings they need to file. They said they've promised to file them in mid-June. Well, we're already in June 20th, and no SEC file yet for the Form 20F. Anyway, yes, they've promised it somewhere here in this press release. And well, why do I see such a dilution? Here in December they had 23 million shares outstanding. Now they have almost 32 million shares outstanding. This is a 35% increase in the number of shares. So the market cap rose 35%, even as the share price remained more or less the same since December through here. Moreover, they made the XING IPO, which means further dilution to me, because the same business that was worth around 800 million here, it is now worth, let me see, if we have 32 million for XING, 32 million times 1320, 32 million times, just a sec, 32 million times 1320. Okay, we have 422 million market cap for XING, and I have it here, and just a second, and 526 million for XING Mobile Communications, which means the same business that was valued at around 700 million here, it is worth now almost 1 billion here. So you see the same business is worth about 1 billion now, and it was worth 700 million here. So even though the stock price is down because of dilution, it represents a bigger business to be. I don't know if you're following me, but I'm not going to derive my valuation model for this, because the share count on XING rose 35% in 6 months. So my dilution factor would go through the roof, and that explains why the stock has been going down. And I will avoid this stock forever, because even though the products are great, revenues are growing very well, and the company is profitable, that doesn't make the share price rise, because the share count rises even faster, and therefore the market cap is rising, reflecting the improvement in fundamentals, yet the stock price keeps going down. So on a 1 to 10 scale, well, because I don't want to be too negative, because it's such a great business and dilution may stop in the future, I'm gonna give it a 4 out of 10, and wish good luck if you own it. I hope I'm wrong and the company proves me wrong. Okay, bye, thanks. Oh, not this, sorry.